Supply and demand trading is one of my favorite and also the most used concepts in the trading. I think it's one of the most valuable things you can learn. So I will try to be as detailed as possible here. I will show you all the strategies, all the ways how I define the supply and demand in my charts, and I will try to, at the end of the video, you should be able to seek these levels in your chart as well, and be able to trade with them. So why is the supply and demand so important? And obviously this is not only in the trading, but basically everything in the world works by the concepts of supply and demand. If you live in a town where everyone wants to eat apples for some reason, then the demand for apple is high, and for apples, and price will be high as well. But if no one wants to eat apples and there is a high supply of the apples, so the price will be low because there's a lot of apples which no one wants to buy, obviously. And if we are going to take a look on a Bitcoin, for example, you can see that price in 2017 basically skyrocketed with the big mainstream media boom, which started sometimes in the fall of 2017. And there was just a high demand on Bitcoin. This was basically just driven by the crowd of people, and everyone wanted to own Bitcoin. People were mortgaging their houses, and look, basically price reached some level which was around 20k at this point. And then the people who were holding Bitcoin from much lower prices started selling, and then this basically got hammered. And this, there is nothing really no kind of magic here or anything crazy secret about the supply and demand and these strategies. It's fairly simple, and once you will actually understand it, then it will really open a new kind of way of at least a technical analysis. Okay, there are still the fundamentals and things like that. I'm not saying that I am showing you some 100% working strategy, but these things work, and this works in every market I ever traded. It works really great. You can have very high strike rate with this. The success rate, obviously, you have to really follow risk management rules and things like that. You just don't believe that you can go in some all-in trades and be able to win because the concepts of supply and demand. But yeah, even in forex, basically, if many banks and companies want to change their base currency for euro, let's say, the value of euro will increase and the exchange rate will change against the other currencies. And in this particular case, we can say that it's a high demand for euro. So every market, this is the stocks as well. When a lot of people gonna go interested in stocks of Tesla or Apple, that price will go up because there is a high demand for it. So it's really simple if you're gonna think about it. And first of all, in trading, obviously, we need to have some basic understanding of what supply and demand is and how these levels get actually created. And the first thing you have to realize is that this is not some sort of art. Okay, there are people who are trading and they have like million indicators in their chart, and they think that if this oscillator will be overbought, and if this moving average will cross this moving average, then this will happen. Yeah, I don't really think this is kind of working this way. And basically what is happening every day in the market, there is just buying and selling currencies at the certain at the certain rates. And on the current market conditions. So if US economy is bad, then a lot of banks and a lot of big institutions are selling dollar and buying other currencies. Or if you know, if some big firm wants to, you know, make some big market deal or whatever, they need to change their currency first, you know, to the currency which they will need in the States. So basically, the big institutions are just changing currencies in the market. This is not something, you know, not some voodoo, and people are obviously speculating. The retail traders are speculating on these price movements, and this is kind of it. So and also what we have to realize that, you know, we as the retail traders, we can't see behind the, you know, behind the scenes. We don't know what is happening, or you know, when there are some news in the market, retail traders are usually late to them, and you know, most of them at least. And yeah, so we must be able to kind of spot these levels in our charts. You know, we have to kind of find a way how to spot these levels in the chart. And a supply is the amount of currency that someone wants to sell at a certain price, and it's a stack of orders at a certain level that has not been consumed in order that the price move higher. So if that supply of order cannot be purchased by other traders, the price will start to fall down. And you know, you can see this as, you know, example here on EURUSD. And one thing I forgot to say, okay, there is a lot of speculation here. Obviously, if you are using a daily and weekly and, you know, higher time frame levels that which are used by a big, you know, big institutions and big banks in their kind of, in, you know, the hedge funds in their long-term trading, or you know, mostly these institutions are looking at higher time frames. If you are, you know, trying to find the supply or demand on 15-minute time frame, this is very, you know, speculative, but it still works great. Okay, I trade every day. You know, supply and demand or on lower time frame works for me for a long time, and I think it will always work. So I'm just, you know, I just don't want you to do, you know, when you are going to be showing your 5-minute AUD CAT chart to someone and show him a demand zone, and trying to explain someone that some, you know, hedge fund bought in at this level on a 5-minute time frame, and that's because price went, you know, up like 2 pips. Just, you know, but still, what I will show you, it's working great on every time frame. Obviously, the higher time frame will have a higher probability, as in, you know, with everything. So, like I said, the supply is the amount of currency that someone wants to sell at a certain level, and it's a stack of orders at a certain level, what has to be consumed in order to the price move higher. And as you can see, we have a supply zone right here, and I will explain you in a minute why this is the supply zone. But you know, something basically happened. Let me draw this a little bit better. Something happened in this area, which where the supply was created. And you know, there is a lot of resting orders in this blue, you know, level, okay, in this blue box. And as you can see, price will revisit this, but the amount of the orders is you know, high enough for the price to, you know, be able to basically reach above them. Okay, so this is acting as a supply, and it will act as a supply as long there we will have orders there, or as, you know, and obviously we can have some fundamental events which will, you know, which will take prices above these levels. But as long as, you know, in this case, price is staying in this blue box, we are in the supply zone, and you can actually short this thing. Okay, you're probably the best traders here. You know, this is not the best case, but still, okay, even if you would enter your trade somewhere here, let's say your stop would be above, you would be ranging for a while, but then eventually you would get lower. And like I said, if there is more traders who are willing to buy the currency at this level, okay, then this area will be pushed higher, and that's because there is just more demand for this currency. But these things usually don't happen because you are it's better to sell here, okay? And most of these traders, these professional traders at least, know these things because they are selling at some sort of discount here in a higher prices, and they will buy again down here at the lower prices. You can see when a price is actually going lower right here, we stayed in this supply zone, and the same rule as with the supply and demand trading, this is or at least I use the very same rule as the support and resistance trading, okay? And which is that 3 touches is kind of it for me. So if price would come once again into the level, I would be getting out from my short trade most likely. But so like I said, 3 touches I'm not really trading the third touch of the level, okay? I can trade third touch of SR, but I very rarely trade the third touch of the supply or demand zone. So let me actually show you right now. I think that this is kind of thing how what people are actually interested in, and I will be talking about this situation in a minute, how these things are actually created. And I did this, I will do this like this, and the supply and demand areas are basically, we are marking them as the consolidations before some very sharp move in the market, which will shift the market structure. And what I mean by shifting the market structure, I know that we haven't talked about market structure yet, but if we are going to make a lower low, if we are going to take the previous low at when we are making supply, this is the valid level. The next and at the demand, let's say that if this is we have a demand zone right here, if we are going to take out this high, then this is the valid demand zone because we made a higher high here. So we have a demand zone right here and we have a supply zone right here. We have more levels. Obviously there is more supply and demand levels in this a particular time frame, but I just picked the most obvious ones. How are you gonna mark this up? Okay, and there is a lot of people marking these levels a lot of different ways. Okay, one of the most common supply and demand traders, they will explain to you that you have some sort of rally base, basically this is your base. We have a rally to here and then we rally the way, so you are always looking for these consolidations. Sorry, we had a drop from here, not a rally. Okay, so this is a rally base drop from here, and let me just quickly find you something. Okay, I wasn't able to actually find it, so I used my very professional drawing skills to demonstrate this to you. This is something you don't really have to this is something you don't really have to remember because I don't use it, I never really needed to. But we have 4 types of supply and demand, okay? And the first one is, this is called the rally base rally, okay? And what it basically means, obviously price will rally into the level, okay? So you can see it, actually you can see it here. Price, second, I will use this tool because it's better. Price rallied into this level, then we made a base, okay, this small consolidation, we paused, and then we make the next rally. So this is your rally based rally. Then you have a rally based drop, which is this case right here. You can see price rallied into the level, made a base, made this consolidation, and then dropped. So this is your rally based drop. And you have a 2 more, which is drop based drop. It's for example, you can see it here, okay, drop, some consolidation drop, and then we have a drop base rally, which I kind of don't see, and it's not really that important actually. So what I want you to actually do, or what I do and what has been working for me, to identify the supply zone, we use the last up move, the move higher before the sell-off. Okay, so let me write this down for you. So here is your definition of how you will identify this level. To identify a base, we look for up or down candles that precede a significant move in the opposite direction. It has to take out previous swing low or swing high to be valid. Okay, you can see me right here using a term base. Okay, this is what I've been using from the rally based rally type of trading, but you will also hear me refer to it as just supply or demand. Okay, so. But you can use a base. It's the simplest one. It's totally up to you. There are a lot of people using a lot of different names for this. Mostly because they are rebranding them and try to monetize them as their own concept, which is not true, because these things, I learned these things at the Forex Factory forums, which are like 10-15 years old at least. So if someone will come to you and tell you that he knows how market is manipulated and that he has all the cool names for these levels, then this is just something which not really is will give you any more value than what I'm showing you right now. So don't get really tricked. Anyway, something I want to actually talk about. Let me just mark this level once again. So to recap this, we have this consolidation. This is our base. We have this low. Okay, we have this low right here, which has to be taken for us to have a supply or demand, and you can see that it's happening right here, and we can mark these two candles, which these are the two last up candles which led to the big sell-off. Also, what you can actually look for are the engulfing candles. Okay, there are very often happening when the supply and demand zones are created. The next thing, what is your kind of probability enhancer, is the trend line breaks. Okay, this is not a perfect one. I have a great example in the next charts where there is a nice trend line break as well. But as you can see, we are taking the low, we are making a lower low. Even if you are more conservative and you want to see this low taken, then this is happening here, and this is your origin of the move. Obviously you can use this as well as your supply, but your absolute origin of the move is right here. And it will take some time. Like I said, there is more levels in this whole move, because especially if you are day trading, you just don't really want to wait 3 weeks to take a trade on your USD. But as you can see, price returned here and acted as a resistance here. This is not the best example because obviously these three touches would turn a lot of people out of the trade. Even I would be really thinking that I will close this. So not the best example there, but you can see very nice example right here. As you can see, we had this resistance, okay, right here, and which was basically the last down move, which led to this break above the resistance, taking out these higher these swing highs all over the place. It was this consolidation, this down candle, this down move right here. And like I said, these levels are created with some significant buyings in the market. Okay, so definitely someone with deep pockets was buying at this level. And as people were following this, and as more and more traders were stepping in, and they didn't, let's say, get filled here, there is a lot of liquidity in this blue box. Okay, this is very, if you are going to think about this, this is just a next area of liquidity in the chart. Okay, the same as we have a liquidity below support and above resistance. We have a lot of liquidity, which we already know that are the limit orders, of course, in these boxes right here. And we just, sometimes you will be extremely precise. Okay, for example, if you just put your limit order here as well, and you would play this with a very tight stop loss, and then you have your, because you have to think that this wasn't tested before, okay? Like, this is how your chart is looking like. You would make, this would be a 8-hour trade, which obviously it's crazy, because risking 1% will give you 8, and risking $100 will give you 800. So, and even if you would wait for the candle close here, okay, still the 3-hour trade is very decent thing. Your general place where you want to put your stops is below these levels, okay? Not immediately below, so you can get stopped out. I can recommend you, obviously depends on what you are trading. The five pips on Euro USD below the level is something which would make sense for me. You have to obviously check the average true range and stuff like that for the pairs you are trading, but general thumb of rule is just few pips below the demand and above the supply, okay? So this would save you. Even if you would enter here, then you would really never get stopped out, okay? In this example I would put my stop somewhere here, let's say. And yeah, and you can see price is tested this level, then we sold off finally. And one of the next things which is happening here, and which I use very very often, price will come here for the second time. We will have much weaker bounce, as you can see, because there is less orders in this level, so we have much weaker bounce, and then we are violently break it. This looks like a move which was more likely driven by the news, but anyway, once we are going to break this level, we are going to test this from the opposite side, and we are going to sell off again. So you can use, I call these broken bases, okay? Then when the base is broken, it's gonna become a broken base, obviously. But these are just supply and demand flips, and it's totally the same as the support and resistance flip. Some people might say that this is just the SR right here. But even if you would be using the body or the wick, you would kind of never really get the test. So this broken demand zone will actually give you really precise entry in this case, okay? And and we have a next supply here. As you can see, we broke this trend line, and we this is the last up move, and you would most likely get stopped out. This was news once again. I think this looks like the FOMC in the evening, and you would really need to have your stop a little bit higher. But if you're gonna think about this example, okay, we have a kind of clean double top, and we have a liquidity resting above this level, okay? So especially in the news, a lot of people will say that the news are just random and you should never really trade them, and I can second this in some shape or form, okay? Especially if you are not experienced enough, you should not really be trading news, because you can lose a lot of money. But most of the times in the news, price is just spiking to the liquidity areas. So if you have this up candles, which led to this sell off right here, but you have kind of clean level above where it's really looks like there might be a liquidity above it, then you should at least put your stop a little bit wider, or wait how price will develop once it's going to reach the level. Because for example right here you don't really have any many of things here, okay? We have some small demand which was really tested here. I'm sure if I would go a little bit higher on time frames, then I would see this level, and anyway we have a fill of a liquidity gap, which is also something when you have a liquidity gap, I know that I haven't spoke about these yet. Usually at the beginning of them you have a demand zones, because these are nothing else than just a lot of buying stepping in the market, by deep pockets, by big institutional traders and people like that. So price will spike up really quickly, and there will be unfilled orders left at these levels. So this is also how how the demand zones are created. And if I'm gonna give you this little show you this little cheat sheet, let's say, you can see that we can identify basically the three types of supply and demand zones. The strongest one is when the down after the last down candle, price will just shoot, you know, up very quickly. The best case here is if price will actually, you know, if this big candle is the first candle above the down candle. The second one is kind of slower move higher. Okay, these still can work nicely, but the fact that price left the level in kind of slower fashion is can be, you know, the sign of a weakness. And the weak ones are, you know, which when price will just break above the candle high but start kind of consolidating, and these usually don't work, so you don't want to be trading them. So we have our origin and move. We know that these levels, once they break, they can be used you know, in the opposite directions as well. The next thing what you should be really aware of is how is price retracing to the levels. And I will show you this actually in the screenshot example which I have right here. And you can see this is the US Swiss on the 60-minute time frame, and you can see that we have this up candle, you know, this up move, which led to this big sell-off, you know, very strong sell-off from the level. We took out these lows, so obviously we have a valid supply zone. But what is not good about this one is the V-shape retrace. Okay, you can see the V-shape retrace right here. What this, you know, means is when price will leave the level but quickly returns back. Okay, you can see that basically price was just reaching for some order flow, which might be seen on higher time frames, but then very quickly started to going back to the level, you know, as so this is really a red sign for you that you don't really want to be shorting this. And this was actually a little bit painful as well, because you can see right here that, you know, we had this rejection candle, and you know, you might be thinking, okay, this will go lower, but you know, price broke it quickly afterwards. So the V-shape retraces are something you should really pay attention to. Also, what is kind of cool thing to see here, as you know, even if you would get stopped out, and I you know, I will talk about the risk management and things like that this later on in the behavior modules, but you know, this will happen, and this will happen to you a lot, that you will, you know, miss these things. It happens to me as well. You know, I'm not always, you know, I just sometimes miss the V-shape retrace, and you know, this pin bar candle will get me, you know, all ready to go short, and I will just short this and I will get stopped out. And yeah, you just, you know, you just have to be able to, you know, identify where you made a mistake and try to not make it again. But you can't really think that you will, you know, never lose money in trading. So even if you're gonna get stopped out, you can see how price made this kind of nice rounded retest, tested this from the second time, and you can use this level as your long entry. And you know, we are going places here, so you would at least, you know, made up your loss just a few hours later on the USD Swiss. Here is just a quick example of how rounded retest actually should look. New Zealand CAD 4-hour time frame, you know, this up candles, the last up candles before the sell-off. Okay, we are breaking the market structure here. Also, you know, you can use some sort of trend line here as your confirmation, you know, that supply is created. And once we are going to retest, and this is very nice rounded retest. Also, after this sharp move lower kind of calms down, we have nice retrace in a channel, which I talked about in the support and resistance lesson. Okay, how these channel retraces are actually one of the best you can get. So the next confluence here, and you know, you can see how price is not able to close inside this. Okay, so even if you would enter here, your stop would be a little bit above, and you would be able to ride this whole move down. So this is kind of you know, very nice example of how you wanna short the supply. So how you wanna mark these levels, and this is, like I said, this is kind of up to your preference. Obviously, the, you know, the bigger levels will give you the bigger stop losses, but you know, you will be more conservative than just marking out a single candle. I generally, what I actually do sometimes when I'm marking these levels above H4, I am just using a single candle. But you can see that on the GBP/USD here, if I would go just to the 30-minute, I would, you know, kind of mark out this whole move, okay? Because this is, you know, a lot, you know, this is risky for me, you know, for my kind of risk management. So I'm on the lower time frames, I'm marking out the whole moves higher. But if I'm on the daily, if I'm on the, you know, H4, I am just marking the bodies of the candle. So let me actually show you the example here on the GBP/USD, because obviously the best way how you are going to learn these things is just you know, when you will open your chart and you will just, you know, watch and try to find as much examples as you can. So you can see we had this first supply right here, up candle, you know, very sharp sell-off, return to the level, price is failing to close inside, we are selling lower from here, and you know, I can even extend this, and this was just used for a second time. Also we have a SR flip here, okay? These two very often go together, and you know, you wanna be looking for supply and demand zones near the significant SR levels, okay? This is something which will also increase your probability in the trades. So yeah, and you can see for the second time, you know, we have our first trade, the second trade. What I kind of like to see is the liquidity taken, you know, the order flow from the previous highs if the level was already tested, but you know, this led to the massive sell-off, and you still would be able to get to the short at, let's say, here, because you know, like I said, down candle, big rally, this is the demand zone which was tested here, but overall price was very bearish at this point. We broke below this level, and you are shorting the, you know, retest, and you know, you are catching this whole move. There is another example of demand zone, you know, down candle, big rally, and you know, 1, 2, 3, 4 tests. I am not really trading these two right here because this is the third and this is the fourth test, so nothing really for me. And you can see that very shortly price broke below the level. So the S&P 500, as we actually, if you are going to, if you remember the trend line, video, you can see what I was, you know, meaning by the demand zone right here. We have a break above this trend line, last down candle, which led to this move higher, which took out these highs right here. So we shifted market structure. You know, we made a higher high here. We have a first and second test, and we are continue higher. I don't think that I have anything more marked out here. No, I don't. AUD/USD, this is a nice example of the broken base, of the broken level. The down candle, you know, big rally, this is obvious, very obvious demand zone, that, you know, there was a lot of buying in this level. But at the 2 a.m. The European time, some news came out, and this just, you know, didn't provide any support whatsoever. And once price makes this very big, you know, rounded retest, then you are just shorting it here, and you will have very nice quick trade. You know, this is 60-minute time frame, but you can see how price just collapsed from here. And obviously this is because there is a lot of orders resting in this level, and you have the second test here, which led even to the bigger sell-off. And you know, I kind of didn't mention this. level right here. We have a liquidity gap, and at the beginning of the liquidity gap is the demand, which got tested. So you could long this actually, and once we broke it, this is kind of the same thing. Okay, even if I'm not going to use this and I will use this broken demand, then nothing really changed. Just in this example, I use the body of this candle because it would give me a kind of better sign of where I should put my stop loss. And this is kind of interesting thing. I will be talking about this in the liquidity gaps, because a lot of people will get this wrong, and they will think that price will reach this supply zone, okay, right here, because price will want to fill this liquidity gap, but we kind of already did, because there was a gap here, the gap up and gap up, gap down, so these kind of filled themselves and they don't have to be filled anymore, and we are just filling the rest of this, which is below the black line, which we filled right here and we sold off. So USD, the last example on a Bitcoin, this is the broken base as well. On a daily, you can see how I used just the daily candle, the up candle, we sold off from here, we made a lower low, so there is expected selling here, but price will just smash through it, and on the other test from the opposite side, this is used for a buying, and this was the start of the whole uptrend which we have since like February this year. Obviously the hindsight example, but there is more and more, there's more things into it anyway. So and I wanna also show you how if you were around 2017, okay, down candle, Bitcoin made a all-time high from here. There was some buying happening inside this wick, but there was just not enough demand to take the price higher. Price broke the level, selling, and then dropped to the basically 3k over past couple of months, and we have over and under here as well, and much more factors of confluence here. So I just want to show you how you can use these concepts at basically any market. What I was recently, no, it wasn't Netflix, it was Apple. I'm gonna take a look on Apple on a daily time frame, or maybe it's a weekly time frame, and this is a little bit messier because there is a lot of gaps, obviously. So you have to really, I am when I'm watching basically stock market, I am making these levels really wide basically, because like I said, a lot of gaps here. But on a daily, I was using some sort of like this up move where price started selling off, and we hit it here, made a pin bar, and then started going lower. I placed a short somewhere here, with my target was once again this down candle which started this. Basically you are looking for the starts and ends of the move. So this I kind of identify this as start of this whole rally higher. You have also gaps here to be filled. So yeah, nice trade in stocks. And basically the only reason why I'm showing you this is the fact that you can use these as any markets as you want. My favorite trading style is combining the supply and demand with the volume, because what I will show you in the volume section, and I think we will have just one video dedicated how you are going to be connecting the supply and demand with volume, because there is a lot of things here, okay? And you can say for example, if I'm gonna use the S&P right now, it's not the best example. Okay, let me actually show you. You can watch this chart on H4, and you can say that we have this up candle which led to this sell-off, so this is the supply. Then we had this up candle which led to this sell-off, so this is the supply. And we had this up candle which led to this sell-off, and this is the supply. And and etc. and etc. And you know can be unsure which levels you should use, which levels you shouldn't use. And this is where kind of volume comes into place, because you will be able to actually, if I'm gonna just very quickly show you, you are going to be able to determine which levels are actually stronger than the others, okay, by using the fixed range, by using the naked POCs from different sessions, and a lot of things which we'll cover in the details later on. But yeah, I think that I covered everything about the supply and demand. Like I said, by now I showed you, I think, plenty of things, and just don't really, and what I don't really want you to do is just stuck up on one concept, okay? Even though this is one of my favorites, it doesn't really mean that I just no, I'm not looking for anything else, basically. So try to combine as many things as try to find as many things, as many factors of confluence as So for example, even with the indicators, basically, let me actually take a look what is RSI doing here. For example, okay, we have a divergence here, okay, on RSI, for example. Okay, just this was like most random thing which came to my mind, which I can watch, okay? And if you are using RSI, then okay, good, but still, I think that these oscillators will work only if they are used correctly with the price action. But if you are using RSI and price is in supply, then you can see a divergence. Then okay, why not? Why you can take this? And I don't know. I'm just not gonna be randomly slapping the indicators here. But yeah, Bollinger Bands obviously are going to be some out of balance. But I'd never really trade this, so. I'm not gonna give you my impact, and I also just forgot right now what chart I was watching. It's just cool. Anyway, so I think that I will end the video here. If as with everything, basically, if you have any questions, then please just DM me, send me a message in the group. Like I said, we can have a call, we can just chat, and I will be more than happy to answer everything you want to know about this, or about basically anything else. So thank you guys for watching, and see you in the next video.